Hi guys, good afternoon and welcome to Money Control. I'm Karunya Rao and with me is Manisha Gupta, and today all eyes on crude oil prices which are at a 6-month low. Manisha, what's hurting demand?
Oh, well, yes, it hasn't started well for this week at all. And while we were on a vacation or celebrating our Independence Day on Monday, the international markets clearly saw a very sharp decline. 3.5% down for the US crude markets, 5% down for Brent. So much so that while Brent is inching towards 90, we did see the US crude prices break below $90. That's where they're trading right now. And we've seen a low of $86 per barrel as well. The sharp decline comes in because the China has not been able to manage its industrial data. It is lower than last month and it is much lower than what the street was expecting. And that really came in as a rude shock. The initial knee-jerk reaction really came in from that. And then you also have the Iran nuclear deal in talks. The European Union paper is seemed to be well received, and it could be as early as this week itself that we might see here something positive on that. So if the Iran supplies also start coming into the market, that would be further increase in supplies. And then the most important statement came in from Saudi Arabia, Saudi Aramco rather, who said that they can increase production to 12 million barrels per day, which is a record for them, and they're only waiting a government's go ahead in that. So everywhere that you look, everything conspired or transpired towards weaker crude prices, and that is what we have on screen today.
But at the same time, when Aramco is giving these statements, OPEC is saying that the production or rather the demand predictions have been cut down. So going forward, what's likely to happen? Because $90 a barrel was an important resistance level, or technically speaking as well. So now that crude has retreated below those levels, what could lie ahead possibly, and what should traders brace themselves for?
Well, yes, OPEC suggesting that we're looking at lower demand this time around and that we are looking at less than 100 million barrels per day of a global demand does not augur so well for the prices. In the first quarter, we did see 100 million barrels per day of a demand, but second quarter was a big weakness and third quarter really is getting nowhere there. So, yes, there are concerns about demand there. And the fact that all the economic data that we're looking at, whether it's coming from US or Asia or China within that and Europe, all has been on the weaker side. So that is a big concern. The only one positive for the crude bulls perhaps is going to be the hurricane season. There are 20 named storms which can be expected from now until end of November, and within that as well there are 6 named hurricanes. Between Gulf of Mexico, if that happens, even if there is damage, lesser damage, the whole point that there are evacuations and closures in anticipation of damage, all of that does lead to supply there. So that is one thing that the markets will keep an eye on. You wouldn't see a complete sell-off until the hurricane season is still on, and that is until November end. November also brings you the midterm elections in the US market, so you wouldn't see too much of a run-up in crude prices also. So I'm assuming we are going
Yeah.
to be stuck around these 85, $95 per barrel kind of levels. As of now, today I was talking to a lot of people. None of them have a buy call in case of crude. They suggest that another 3 to 5% of a decline from here for the crude prices within this week is what they are playing with or trading for.
But just a couple of months ago, we were getting some very divergent forecasts as far as crude price is concerned for the end of this year. On one hand, you had $65, $70 levels, and on the other, you had $140 a level. And you're saying it's likely to be range bound at least till November, till the midterm election in the US happen. Um, are there any revision in these forecasts? Do we have a realistic number that now the street will be looking out for, or is the street still divided?
Oh, very much divided, Karunya, because there are just so many uncertainties even right now. The other reason that you have seen the crude prices decline also is the strength in US dollar. Last week we saw a dip below 105. We're trading at 106.5 right now. So that jump up in the dollar index also seems to be weighing on various commodities. So it's not just crude. Look at metals, look at precious metals. Various other commodities also have gone in for a decline because of the strength in US dollar, because of the weak China data. The Russia-Ukraine war is far from over. The recession fears are
Yeah.
far from done. September also has a US Fed meeting. So all of these things will just keep on keeping all of these markets jittery. And to your point on, are we looking at a more narrower range for the next 3, 4, 6 months? We are not. So there still are those reports out which are suggesting 80, 85 on the lower side. And there are reports which are suggesting 130 on the higher side as well in the matter of next 3 months itself. So yes, it promises to be a volatile time. But as I said, you can't expect a big sell-off because there are a lot of concerns, and 130 is still on cards.
Okay, well, let's see how it plays out. What about gas demand? Because that one looks pretty firm. Last week as well, we saw some run up there, and demand outlook was also quite optimistic. So while oil may be sluggish, will gas continue to be strong?
Gas absolutely continues to be strong. So whether you look at the US gas prices, which are trading on the firm side, or the European gas prices, which are inching close to the all-time highs that we saw in the first quarter of this year itself. So yes, gas is a different beast altogether. Strong demand prospects. The global inventories are low. The US inventories itself are still 12% below 5-year average. So everywhere that you look for in case of gas fundamentals, it looks quite bullish. So as I said, there are three gas prices that we look at: the US gas prices, UK, and the European Union gas prices, and all metrics seem to be running firm. More so in case of Europe and UK, where the prices actually are up by nearly 18 to 20% in the matter of last fortnight itself. And today as well, we are looking at very positive cues on that.
All right. Well, I think that's all we have in today's commodities wrap up for you. All eyes on crude oil prices, which continue to trade below $90 per barrel. We'll be back again tomorrow with a fresh update on the commodity space. But that's all for today. Thank you for watching.